Hey everyone, and welcome back to another earnings review. So we have to go over Elf Beauty today. Now, this one was wild. When they reported, the stock went down, I think around 15% or so at one point. And as you can see right now, by the way, down 15% means that the stock was trading at around $75 after hours. Right now, pre-market, the stock is trading close to $100. That's quite a swing after the market closes. Of course, we've had maybe the early impact of the acquisition. They are acquiring Hailey Bieber's company for around $1 billion. We're going to talk about that. Of course, sales growth have come down drastically. There is an impact from tariff from China. We're going to talk about that as well. But then we've had news about this whole tariff story. The US Trade Court blocks most of the tariffs that were imposed by President Trump. Now, of course, this is not the end of the tariff story. They can still appeal. We're going to talk about that as well. So this is, of course, one of the main reasons why the stock is now up close to 10% before the market opens, because, well, tariffs do impact a business such as Elf. So let's talk about what has happened this quarter. Also want to talk about already a positive analyst comment on the acquisition. So stay tuned for all of that. If you enjoy this type of videos, hit all the buttons. Would really appreciate that, especially the subscribe one. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up, the US Court of International Trade ruled on Wednesday night that Trump overstepped his authority when he imposed his reciprocal tariffs. So the court ruling, and this comes from Goldman Sachs. Yes, I do think that they also used ChatGPT for this. In summary, the US Court of International Trade blocked most of the Trump administration tariffs imposed under the International Emergency Economic Powers Act, including a 10% baseline tariff and additional tariffs on China, Canada, and Mexico, but not sectoral tariffs such as those on steel, aluminum, and autos. The court that ruled the IEEPA does not grant the president unlimited tariff authority, as tariff powers rest with Congress. Now, the immediate impact is this: 6.7 percentage points of tariff increases since the start of 2025 are halted, affecting broad-based and country-specific tariffs, but not sectoral tariffs imposed under other authorities. The administration has 10 days to halt tariff collection, no refund for tariffs already collected. Legal reason here: the court found the tariffs exceeded presidential authority under IEEPA, did not address a true, unusual, and extraordinary threat, and that Congress cannot delegate unlimited tariff power to the executive branch. Now, the appeal and uncertainty here: the Trump administration has appealed the ruling, but a decision is unlikely within the next 10 days. The outcome creates uncertainty for businesses and trading partners. Now, the administration could use other laws to reimpose tariffs, Section 122, up to 15% for 150 days, Section 301, unlimited tariffs after investigations, Section 232, sectoral tariffs, or Section 338, up to 50% on discriminatory countries. These alternatives may allow similar tariffs to be reinstated, though with some procedural or time limits. The ruling may provide temporary relief to consumers and businesses, but inject long-term uncertainty into trade policy and negotiations. Tariff revenue was not counted in fiscal package offsets, so the ruling has limited direct fiscal impact. The next step: the White House is expected to quickly pivot to other legal authorities to reinstate tariffs, likely starting with a Section 122 tariff while launching Section 301 investigations for long-term measures. Again, the 122 section is up to 15% for 150 days, which of course will put pressure on the other countries to still come to the table and renegotiate trade deals. I know this is a lot of political stuff and bureaucracy and whatnot. I'll admit, the system in the US, very complicated. Okay, so I'm not going to say that I understand everything. That's why I bring the guys from Goldman Sachs. So we'll see. Of course, right now the markets are reacting quite positively, but don't think that we are out of the woods just yet, because again, they could just quickly go back to 15% for 150 days and then work their way up to Section 301. Remains to be seen, but as of right now, yes, the market does see this as a short-term positive thing. Although I still think that we would all like to see countries come to the table and make deals so that regardless of what will happen with this whole tariff story, at least we've got the deals part of it out of the way, right? The one with the UK, the potential one with Europe, with China, with South Korea, with Japan, with Vietnam, etc., etc. So at least that's out of the way. That removes even more uncertainty, more things that can change in the future. Moving back to ELF, because this is of course important for ELF, since as you will see, a big chunk of their products does come from China. Now, first up, the main reason why the stock went down quite a lot yesterday is this. ELF Beauty announces definitive agreement to acquire Rhode in $1 billion deal. Now, the $1 billion deal is comprised of $800 million of consideration payable at closing in combination of cash and stock, subject to customary adjustments, and an additional potential earnout consideration of $200 million based on the future growth of the brand over a 3-year lifetime. So, of course, a good incentive to make sure that the brand continues to grow. Rhode has quickly established itself as a disruptor in content, commerce, and community building, a robust direct-to-consumer business. The brand has seen incredible growth, more than doubling its consumer base over the past year, driving a total of $212 million in net sales in the 12 months ending March 31st. So they're not paying that much for this business, right? If this business is growing this quickly, and well, for the last 12 months, they've generated $212 million in revenue, it's not too bad. Of course, I don't know what their margins are, but it's not too bad. And I'll show you why this is important for ELF. Rhode's products are currently available on rhodeskin.com, with plans to launch its first physical in-store partnership with retailer Sephora throughout North America and the UK before the end of the year. Hailey Bieber, will continue her role as founder and additionally serve as Rhode's Chief Creative Officer and Head of Innovation, overseeing creative, product innovation, and marketing. She will also act as a strategic advisor to the combined companies. A defining voice in beauty, Bieber stands out as a cultural tastemaker and top beauty influencer. I won't disagree. Her influence, paired with the brand's innovative marketing strategy and team, fueled Rhode to be the #1 skincare brand in earned media value in 2024, representing 367% year-over-year EMV growth. Now, we already have here a Bank of America analyst that raises the price target on ELF from $95 to $113 and maintains a buy rating. The analyst said the following: "We are positive on the acquisition of Rhode for several reasons. One, as an entirely direct-to-consumer brand, ELF has significant distribution opportunity. Rhode is launching in Sephora US and Canada stores in the fall and Sephora UK by end of year. Rhode is expected to be accretive to gross margin, EBITDA margin, and earnings, suggesting room for deeper investment in marketing. 3. This tightens ELF's relationship with Gen Z customers who seek out prestige-level products. Rhode, and this is the final important part here, Rhode offers 10 products from $18 to $38 versus ELF's average of just $6.5 and mass peers at $9.5. And this is the important part. Now you get two different brands, let's say. A more premium brand where your average selling price is much, much higher than what you're used to for ELF, right? I mean, this is more than double, way more than double of ELF, right? The $18 to $38 compared to an average of $6.50. Well, if they can continue to grow the premium side of the business, well, welcome to the reacceleration part of the growth story. And of course, if margins are very good, this helps the bottom line as well. Moving on to the quarter. So net sales only increased 3.58% year over year. Cost of sales only 1.77%. Gross profit was up 4.3%. Selling G&A expenses were down 8.3%. And so here net income was up 94.47% for the quarter. Now, touching on the China part of it, of course, you can go on FinChat, link in the description, click on the AI summary when you look at the transcript, and it gives you the key takeaways here. So they said the following: the company is facing significant potential cost increases due to tariffs on goods imported from China. They are implementing mitigation strategies, including price increases, supply chain optimization, and business diversification. The potential impact is substantial, with a possible $50 million annualized hit to cost of goods sold if tariffs remain at 55%. Now, they did say that they plan to take a $1 price increase on the entire product assortment globally, effective August 1st. This is the third price increase in the company's 21-year history. Of course, if you increase it by $1, you are sort of trying to balance out that tariff impact. Now, as for international expansion, they said that international sales are the fastest growing part of the business, growing 60% in fiscal year 25. The company is expanding into new markets, including Netherlands, Belgium, and Poland. Now, I just asked it specific question about the China and the tariff story. So they said about 75% of e.l.f. Beauty's global production comes from China. As of May 14, products imported to the US were subject to tariffs at 55%, 25% from 2019, plus an incremental 30%. If tariffs remain at this incremental 30% level, the gross impact to the cost of goods sold is estimated to be approximately $50 million on an annualized basis. As I've just said, the company is also not providing fiscal year 2026 outlook due to the broad range of potential tariff outcomes. Remember, imagine if they did give us guidance and then suddenly, the tariffs do not exist anymore, then that guidance changes completely. So, okay, here it makes sense. And like I said, there is going to be a $1 increase on the entire product assortment. They are diversifying the supply chain by setting up additional operations outside of China. And of course, this will take time and this might cost them, but it is the smart thing to do. So all in all, that's about it. Congratulations, by the way, to all of you that did buy at $50 mid-April or something like that. You basically doubled in a month and a half. So congratulations. Of course, yes, back then before the earnings, there were still some risks, right? There were still some unknowns, I'd say. Some unknowns around the growth story, the marketing impact, maybe diversification from TikTok, what happens with TikTok, the China exposure, the tariffs. So there were some risks. Okay, you took that shot and you got rewarded by a quick 2x or so in a month and a half. So congrats to you. The acquisition, in my eyes, makes complete sense. Of course, execution is key now, but yeah, so far, so good. So anyways, that's all I've got for you right now. If you enjoy this type of videos, hit the thumbs up button, subscribe if you have not, and I'll see you all in the next one. Bye-bye.